Well, hi everyone, and welcome to the Infinity Futures Daily Trading video. My name is Raleigh White, and I'm here to talk to you about the trades we took in our live trading room on Friday, December 12th, 2014. Well, looking at today's economic calendar, you can see that we had a few things that we had to be aware of. At 7:30, we had the release of the Producer Price Index data, which came in lower at a negative 0.2% versus a forecasted level of a 0.1%. Then at 7:30, we also had Core Producer Price Index, which came in lower at an even 0% versus a forecasted estimate of a positive 0.1 of a percentage point. Then at 8:55, we had the preliminary University of Michigan consumer sentiment data come out, and it was significantly higher than expected, with a value of 93.8 versus a forecast of 89.6. Now, as far as today's pre-market sentiment was concerned, things were fairly negative coming into the open. Now, the Asian markets had closed mixed on soft China economic data. We see that the China industrial production for November came in at 7.2%, but that was well below the level of 7.7% in October. We did see that the Shanghai market was up 0.5 of a point, and Hong Kong was down 0.3 of a point, as the weaker data was spurring hopes of stimulus from the People's Bank of China and very volatile trading. The Nikkei closed up 0.7 of a point as the weaker yen was helping export shares, and Australia closed down 0.2 of a point as lower iron ore prices hurt miners. As a matter of fact, iron ore prices are right now at 5.5-year lows. As far as the European markets are concerned, they were open but trending lower on falling commodity prices. Now, investors were cautious as oil prices continued to fall and increase pressure on the energy sector. Sentiment was further weighed by the soft China data and the potential impact that could have on Eurozone export demand into China. Focus for many European investors would be on the European Central Bank, as the economic pressures are starting to build support for large-scale quantitative easing program early in 2015. As far as the United States is concerned, Wall Street figured to open up lower on the slumping crude oil prices. Now, the futures were pointing down coming into the open following the global markets lower and on falling oil prices and the soft China economic data. We did see that the International Energy Agency cut its 2015 global oil demand and says that falling prices are driving social instability, particularly in countries that are heavily reliant on oil exports. Focus for many U.S. investors today would be on the preliminary University of Michigan consumer sentiment data due out at 8:55, and then things would shift to next week's FOMC statement and activities planned for the middle of the week. As far as our trading activity is concerned, we attempted 4 entries in the markets, and I was filled on 2 of those, both of them in the E-mini Dow market. But before we look at those trades in any detail, I do need to remind everyone of this following important disclaimer, and that is that trading futures involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. And always remember that past performance is not necessarily indicative of future results. Well, turning to the charts, let's begin here with the E-mini S&P 500. And we can see here right at the open of the trading session, we had 2 bars moving lower, followed by 1 bar retracing and a second bar retracing, and I was hoping to get a short entry here at 2016, but this bar opened up, moved through what would have been my profit target, and when that happened, I took this trade off, and I'm glad I did, because had I been filled, I would have been knocked out for a 4-tick loss. Now, staying with the E-mini S&P, you can see that we had 1, 2, 3, 4, 5, 6 consecutive bars moving higher, followed by 1 bar retracing, and I was hoping this second bar was going to pull back and give me an entry here at 2017 3/4, right above the previous day's low. It came within 2 ticks of giving me a fill and then moved away from me, and I had to take this trade out of the market. The next market I want to take a look at is in the E-mini Dow market, and this is where we had our 2 fills today. You can see here right at the open of the trading session we had 2 bars moving lower, followed by 1 bar retracing and a second bar retracing, and I was sitting here with a short entry at 174.16. Well, I got my fill. The market made a 1-tick move in my direction and then quickly moved against me and knocked me out for an 8-tick loss, which put me down $40 per contract traded. Now, staying staying with the E-mini Dow, you can see we had 1, 2, 3, 4, 5, 6, 7 consecutive bars moving higher, and the market continued to move higher. And then we had 1, 2 bars moving in one direction, followed by 1 bar retracing, a second bar retracing, and this gave me a long entry at 174.62. Now, in this case, I was risking 8 ticks to make 8 ticks, and it's kind of an interesting trade because I got my filled right away. The market kind of bounced up 5 ticks. When that happened, my stop loss moved to break even, but then rather than giving me the extra 3 ticks I needed to get to my profit target, the market moved 5 ticks, my stop loss moved to break even, and then the market flicked lower here and knocked me out for a scratch trade. So as far as the trading session is concerned, I attempted 4 trades, and I had 2 fills, 1 losing trade, which cost me $40 per contract, and 1 scratch trade. So I ended the session up, I ended today's session down $40 per contract traded, and looking forward to seeing what kind of opportunities might present themselves next week. Well, looking at next week's economic calendar, you can see that we have a fairly busy schedule. We start things off on Monday with the Empire State Manufacturing Index, the capacity utilization rate, industrial production, and the National Association of Home Builders Housing Market Index. Then on Tuesday, we have building permits and housing starts, followed by the flash manufacturing PMI report. Then on Wednesday, extremely busy day with consumer price index, core consumer price index. We have current account, crude oil inventories, and then in the afternoon we have the FOMC economic projections, the FOMC statement, the federal funds rate, and the FOMC press conference. So there's going to be a lot of focused attention on Wednesday afternoon and the FOMC activities. Then on Thursday we have unemployment claims, we have the flash services PMI, the Philly Fed manufacturing index, and the release of natural gas storage data, and we conclude the week on Friday with the European Union Economic Sentiment Summit, and it is the 3rd Friday of the month, which means it's options expiration, and this happens to be a quadruple witching day for options expiring. So we can see next week we have a fair amount of activity on each and every day, and hopefully that'll give us some nice opportunities to trade the markets. And with that, I'd like to thank you all for watching today's daily video. I wish you a fantastic weekend, and I look forward to speaking to you on Monday. Take care and good night.